here on a Wednesday afternoon, Carol, where we're actually seeing stocks now get a bid into the close, things flipping into the green as we get closer.
I always think that's a positive, right? In those last few minutes of trading to see actually some buying into it. On a day or just right before, Tim, we're going to get some interesting data points.
Yeah, kind of a double dose of the consumer tomorrow morning with an update on retail sales. And then Walmart, because we are not done with earnings yet, Walmart's going to report so we get an understanding of how the consumer's feeling about the economy. Are they trading down? What are they buying? Always some good insight coming from Walmart.
So that's the consumer economy. There were some ominous remarks about the industrial economy with China Baowu Steel, the biggest producer, warning of a severe industry crisis. I was just looking at the steel makers and the S&P indexes, down 1.2% as a group.
Yeah, and that's not a good macro read for sure. But also, guys, you know, volume is terrible right now. So I have a hard time taking any sway in where we're going with the indices. I called it a nothing burger, called the CPI nothing burger.
Why'd you call it a nothing burger? Because of volume? Because everyone's on vacation?
Yeah, but also like it was just confirmation bias. That's how I was looking at the CPI.
But I guess taken in hand with what we saw 2 weeks ago at this point with the jobs numbers. I don't know. This one's pretty Fed friendly.
Are you saying the people that are buying into the close are kind of lame investors, that they really don't know what they're doing?
No, they're probably the systemic investors buying into the close.
Just checking.
All right. Well, we look at a day here, a mixed day in the bond market. The VIX remains lower once again, down around that 16 level. The dollar relatively unchanged, and Bitcoin taking a slight leg lower. We did see a bid come into some of the equities here at the closing bell, just enough to flip a couple of the indices from red to green. The Dow Jones Industrial Average higher by more than 200 points, or about 0.6%. The S&P 500, which has been holding in the green for most of the session, is going to finish higher as well, 21 points, or about 0.4%. The Nasdaq, which was in the red just a few minutes ago, looks like it's going to close in the green, though we can call it relatively unchanged, only up by about 5 points. But the Russell 2000, it's been in the red all day, and that is where it ends, down 0.5%.
Yeah, pretty small moves there. So let's go dig a little bit deeper into the S&P 500. And what you're finding, guys, is almost an even split. 293 names in the S&P 500 gaining ground on this Wednesday. Scarlet, just about 202 to the downside, 8 unchanged.
Yeah, but the majority of the sectors in the S&P 500 are in the green. Financials leading the way, up 1.3%, by far the best performers, thanks to some strength in insurance companies. Energy stocks and tech gaining about 2/3 of 1%. On the flip side, Alphabet is dragging down communication services by 0.9%, and consumer discretionary and utilities also finishing in the red, but not by a whole lot.
All right, guys, gainers, individual gainers, something to eat, something to wear, and something to do. So we start with Kellanova, finishing the day just shy of an 8% gain. It is your number one gainer in the S&P 500 today. We all know the story, the merging of these two companies, essentially, or I should say an acquisition. Mars agreeing to buy Kellanova for nearly $36 billion, including debt. I know mergers don't happen. I got it. Bringing together two major food companies in the biggest deal of the year. Not a surprise, right? We probably knew something was going to happen when they announced that they were going to break in two last year. I'm talking about Kellogg's and Kellanova, and then said that they were going to spin it off. And so we finally get this deal. So this has been certainly percolating for some time. What, though? You guys have been talking about it with all of our Bloomberg team. It does sound like it brings some growth, though, and some growth brands into the Mars world, if you will. Victoria's Secret, 16.4% higher in today's session, rising the most intraday in 3 years. Company is poaching the top exec from Rihanna's lingerie brand to lead the retailer's turnaround. Stock still under pressure, though, in 2024. And we know this is a brand that's been struggling for years. We'll see whether or not they can bring some excitement back into it. And then Flutter Entertainment, up about 8% in today's session. It's a $36 billion market cap company. No, online, mobile, gaming company, operator of FanDuel, online sportsbook, jumping after it reported second quarter sales and profit that beat analyst expectations. So some big outperformers there, Tim.
Okay, you got the outperformers. I got the underperformers. Let's talk about Alphabet. GOOGL, we've been covering the story all day. Shares finishing the day down by 2.3%. As a result of that story that we reported at our Bloomberg News team late yesterday after the close, that a bid to break up Alphabet's Google is one of the options being considered by the Justice Department after that court ruling found that the company monopolized the online search market, according to people with knowledge of the deliberations. So what could actually happen here? Perhaps a divestiture of the Android operating system, maybe Google's web browser Chrome, or perhaps a possible sale of AdWords, or none of those things and maybe a different settlement. We'll have to wait and see. Our own Ed Ludlow joining us a little earlier on our program, reminding us that whatever they hear from the Justice Department or from regulators, certainly the company will appeal. Shares of Tencent, or ADRs, I should note, fell as much as 3.6%. That's how they finished the day today. Pressures from a weaker Chinese economy. The segment for fintech in the second quarter recorded its slowest growth since 2022. Tencent's revenue was slightly below estimates, despite stronger growth across the high-margin revenue streams of the company. And finally, taking a check of Starbucks today after yesterday's record 25% increase. Shares falling 2.1% today. Shares gave back a little bit of that gain yesterday. It was down as much as 4.6% earlier in the session. Keeping an eye on analyst reaction as they digest the Brian Niccol news. Starbucks was upgraded to a buy equivalent recommendation over at Deutsche Bank, Evercore ISI, and Stifel. Alex.
All right, getting to the bond market here. If I said a nothing burger for stocks, I got to mean a nothing burger for bonds as well. Yes, things moved, but the moves were very muted. You saw a little bit of selling in the front end. You got yields up on the 2-year by about 3 basis points in the back end. A touch of buying, but really on the back end, like the 30-year. You had to go out there. The 10-year, nothing doing, guys, on the 10-year.
I love when you talk nothing burgers.
Thank you.
You're very welcome. All right, so one story that caught our attention, we've talked about kind of the rate reset, our moves that we've seen certainly over the last week or so. U.S. mortgage refinancing surging last week by the most since the early days of the pandemic. Borrowing costs, as we know, continuing to drift lower, and that is certainly moving the needle on this one, Tim.
Moving the needle ever so slightly, given that, rates are still significantly higher than they were a few years ago, and given the fact that so many Americans out there who do own homes right now own homes with a mortgage rate that is sub 5%. So significantly lower than what you'd actually get today if you were to refi or buy a new home.
Yeah, and we were talking about the idea that once you started to see those rates come down, you would see a lot of activity. And most people said the initial activity, Alex, was going to be in the refi and home equity space. Alex.
All right, Cisco out with earnings. The big headline here, they're cutting more jobs, and they see a pre-tax charge of up to $1 billion. We had reports that they were going to be cutting another 5% of the workforce. They are cutting more jobs. Let's take a look at their full year 2025 revenue. They now see that coming into $55 billion to $56.2 billion. I do have to say that they upgraded it the last quarter, and they seem to have upgraded it again for this quarter. So, and they're maintaining their quarterly dividends. Scarlett, again, sort of the traditional tech, that hardware tech, continuing to try to transform.
Yeah, in terms of the quarter that ended, we should mention that adjusted EPS did come in higher than anticipated by 2 cents. Revenue was also better than anticipated, $13.64 billion, and adjusted gross margin, 67.9%, so almost at that 68% mark. Analysts were looking for 67.1%.
Okay, looking at what Chuck Robbins is saying, looking at what Scott Herren, the CFO of Cisco, is saying in the press release, quote, as we look to build on our performance, we remain laser focused on growth and consistent execution as we invest to win in AI, cloud, and cybersecurity while maintaining capital returns. That's coming from Scott Herren, the CFO of Cisco.
Kind of one of these legacy tech companies, right, that have been around for a long time, trying to address a market that has been changing. I mean, they've been working on this for some time. This is a stock that's been under pressure this year, off of about 10% year to date. But we are seeing investors like what they got here. And so you've got the stock in the aftermarket, guys, up about 5.1% here. But, that's a lot of jobs. That's really some changes there at that company.
Yeah, it's interesting, too, the commentary, though, about sort of how they fit into the AI space and the idea of sort of helping to protect their customers. And this has been the big thing I think a lot of investors wanted was, can they articulate a strategy of how they fit into all this AI hype and whatever this AI future is going to be? I'm not sure this quite does that, but at least now they're putting something on paper.
Well, also, if you just take a look at some of the areas of growth, right, like earnings wound up beating estimates. Their service revenue also beat estimates. So not all doom and gloom. And you wonder, is this going to be the trough?